I think when they told me that I was going to get to interview, I wrote, 2 pages of questions, single space, Times New Roman 12. And I asked them for 45 minutes, and they were like, no. So we've got a lot to get through, but really excited. I would love to start out talking about what the end game for crypto regulation from the SEC's perspective is, right? We've seen a very aggressive enforcement strategy from Gensler, or I guess spearheaded by Gensler's direction, right? Is this an appropriate approach to regulation? If it's appropriate, is it effective for promoting the SEC's mandates?
Well, Joshua, thank you for having me here, and it's great to get a chance to speak with you, and thank you to all of you as well. I do want to give you my disclaimer, which I know you know and probably know that I don't need to give because you all know it, but my views are my own views as a commissioner, not necessarily those of the SEC or my fellow commissioners. And I think that this is what makes it somewhat difficult for me to talk about a lot of these issues because, when I look at what the SEC is doing in crypto, I think I ask a lot of the same questions that a lot of you in this room are asking, which is exactly that. What is the end game? What are we trying to achieve here? Because it's clear that the approach that we've taken so far has not resulted in better investor consumer protection or massive ability for us, I would say, to monitor what's going on in the industry. It's just been quite a lot of confusion, and I think that hasn't really served anyone, including us, well. So I've kind of gone back and forth when I think about what the end game is. Is the end game just to say, look, we don't want crypto in the U.S., and so, we'll make it so hard for you to be here that you can just move offshore? Or is it just to really try to force crypto into a mold of entities that we're more familiar with and more used to regulating? So I really can't guess. I mean, I guess, but I can't tell you definitively what the answer is on that. But I think what we should really be doing is focusing on a better end game, which would be to provide regulatory clarity, work with the industry to get to a place where things that should be regulated by the SEC are regulated by the SEC, and people can clearly know when they're in that bucket or not.
So in your library dissent, or your statement on the library decision, you use the term arbitrariness, and then you also juxtaposed a, quote, successful SEC outcome with the real life consequences of what kind of happened with library. Could you talk about whether there is a perceived or actual arbitrariness towards how how the SEC enforces crypto or its kind of perceived regulation in crypto, and whether that is like fair to this industry versus others?
Yeah, and I mean, I think the library case was one of the low points for me as a commissioner. There are a lot of things I love about my job, but this was one instance where I was really heartbroken that we were bringing the case. It was one that I couldn't talk about. I can't talk about cases when they're being litigated. But here was a project that had actually built a functioning blockchain that was being used, and there was a video streaming service built on top of it that people were using. And there had been efforts made to try to launch in a way that was consistent with the securities laws. Now, we sued, they didn't settle, which a lot of people in the crypto space and elsewhere end up settling with us. This company didn't settle, but ended up litigating, and the judge sided with the SEC. And then we came in kind of to finish it off, and the company ended up having to shut down. And so, the question was, why would we go after a functioning project? There are lots of projects in quotes out there that basically put out a white paper, collected money, and then did nothing. This was not the case. And so to me, that's why I use that term arbitrary. If you're going to be able to pick among enforcement cases to bring, it's unclear why we would choose this particular one. And I think that's why, to some extent, enforcement is always a little bit arbitrary, because there are tons of cases that we as a commission can bring in lots of different areas, and we have to pick and choose. We have to make resource allocation decisions. Where does it make sense to spend our resources? And this is just a case where I would have made a different call. And I think we are seeing in crypto that it just does seem like we're picking old cases. I mean, a lot of this conduct happened a long time ago. We're picking old cases, and there doesn't seem to be a rhyme or reason for a lot of the crypto cases we bring. So I do think that this is another reason why, if I'm thinking of bang for my buck with SEC resources, I don't actually first think of enforcement, because there are ways to get people to come into line with what we think the law is that are more efficient, because they apply to everyone. A case is just a case, right? It's one set of facts and circumstances, and it's really hard for people then to extrapolate how that applies to their facts and circumstances. So let's just be more efficient. Let's focus our enforcement resources where there's fraud, where there are, really there's clear harm happening, and let's then work on a framework which will apply to everyone and is then much more efficient.
You can clap. It's great. I'm going to ask you to speculate on the chair's vision for a regulated crypto industry. You can tell me that that's not an appropriate question, of course, but I would love to, know in my mind, is there a look, if crypto just was X, right? Or if we had this, type of authority, and then the industry would look like Y, right? So he, said a lot about come in and register, and, we've talked about that on panels, you've talked about that, right? But is there a kind of a vision for what crypto should look like in the chair's eyes in the US?
Well, I certainly can't speak for Chair Gensler, but let's just look at kind of what is the SEC's vision if you look at the approach that we've taken in crypto so far. So that is kind of the mantra. People should be coming in and registering with us. And so what does that look like? And I've tried really hard to think about what that looks like. Because if you think of a small crypto project, they're not going to come in and register. They're not going to do an IPO, right? It's just that kind of company in the traditional world, they're not doing IPOs. So then you think, okay, so we're assuming that they're going to raise money in the private markets. And so I guess what that would look like is that crypto projects are only dealing with accredited investors. And I think that's kind of problem number one. There is an approach where you could start getting your initial funding from accredited investors that makes sense. But at some point, you got to deal with the general public, because you want people to use your project, and you don't want your project only to be used by accredited investors, presumably. So we have to figure out a way to bridge that gap. And so I don't actually know what that model looks like. Then if you think about the trading venue side, I think that the way the SEC has approached this, we would want trading venues to be registered with us as exchanges or as ATSs perhaps. But I think there's an issue there, which is that you can't trade a security alongside a non-security. It's not actually clear to me that there's a statutory basis for not allowing securities and non-securities to trade on the same platform, but we just traditionally haven't done that. And so that means that you end up in this position where it's pretty impractical, because I think a lot of these platforms are going to be trading, for example, Bitcoin. And so if you cannot have Bitcoin because you have securities next to it, that could be problematic. And so I think you end up with a very different model than what we're seeing now, and I'm not sure. Again, I run into the question of, is that even workable, because people can't tell which assets we're going to consider to be securities and which ones not. So I actually don't know that the registration model as we're conceiving of it now really matches with anything that's workable.
So since you declined to answer my question about Gensler, I'm going to ask another one about him. He began his term at petitioning Congress for statutory authority to regulate crypto in general, but in particular the exchanges, and then he kind of changed his tune. Was that due to, you know, jurisprudential philosophical evolution? Was it, you know, market factors that happened over the course of his tenure, like FTX? Was it pressure from the White House? Feel free to continue to just glare at me disapprovingly if you can't answer that question.
So I mean, I'm not going to speak for the chair, but again, I think we can put ourselves in his chair, right, and say, what do you do in a situation where you look at crypto, and some aspects of crypto fundraising, I think, do fit within standard how we've always thought about fundraising in the U.S. It's covered by the securities laws, fine. You know, we can deal with that. But the actual crypto assets themselves, I think, are if we were really to look at the crypto asset itself, apart from the initial fundraising where there's an investment contract aspect to it, right? Then the crypto asset itself, if that's not a security, is there a regulatory regime for that? And I think a lot of people would say, no, there actually isn't an existing regulatory regime. Now, there are people like me who say, you know, just because there isn't a regulatory regime doesn't mean that you have to have one. But a lot of people say, no, we would like to have a regulatory regime around crypto assets so that people know what it is they're buying, they understand the token economics, they understand a lot of these facts around what it is, what this asset is they're buying. Okay, so, but if there's no regulatory regime for that, then you look at the venues that trade them. That means that if those venues also don't have a regulatory regime around that, you start to worry again, because people can get taken advantage of by those platforms. We've seen that that can happen. Bad things can happen. And so people say, well, we might want to have a regulatory regime. So you can be of the view that there isn't actually authority at the SEC, but then what happens is something bad in the industry happens and everyone calls you up and starts shouting at you and saying, well, why didn't you bring an enforcement action? Well, you know, you can't have it both ways. And I think it's not only the SEC that's trying to have things both ways, but it's the industry and it's people involved in the industry that are having things both ways. Because I can't tell you how many times I've heard people criticize the SEC for not taking action, and then in the next minute they're saying the SEC doesn't have authority in the area. So I think we all need to be honest about where we're coming from. And it is hard, even for me, right? When I look at this and I see frauds happening and I think, well, do we really have authority to bring an action against in this situation and try to address this fraud? Maybe it isn't actually our case to bring, even though the conduct is terrible. And so I think that's why it's so difficult, because when bad things happen, people come to the SEC and say, you should have solved it. And so then the answer becomes, okay, well, then we will claim authority here so that we can go in and solve some of these problems. So let's all be more honest and let's figure out what regulatory regime we as people want, and whether it's going to be the SEC that's the regulator of some or all of this space, or whether there's going to be another regulator or self-regulation, whatever it is we decide. But I think for us as regulators, it's also helpful to have clarity about where Congress wants the authority to lie.
That's a very fair point. Since you brought up Congress, is there a responsibility for the SEC to be kind of looking at what Congress is doing, right? So we've got multiple bills moving through Congress that are aimed at regulating the industry specifically. And it feels like from the outside that the SEC is just like, I don't care. I'm going to do whatever I want to do, irrespective of what Congress is doing. I don't mean that disrespectfully. I just mean, you're kind of like continuing your, to just go along your way. Should you be taking notice of Congress's desire, stated, officially, to regulate the space and take a different approach?
Well, I do think that we have to pay attention to what's going on in Congress. And, I look at something like stable coins, for example, where there's been a lot of discussion in Congress around where the regulatory authority should lie. And it does become awkward if then we sort of come in there with our own view. At the same time, we have authority, and we should be, and speaking just generally, not with respect to stablecoins, we have authority, and Congress has told us that this is our authority, we should use it. So where it's appropriate, we should be using it. We do provide technical assistance to Congress when they want it, when they are drafting legislation on any of these things, and so that process happens, certainly. But I think it's good for us to have an eye on what Congress is doing, and some recognition of the fact that maybe Congress doesn't think that we should have authority over aspects of this space, and that's something we have to pay attention to. It has been great to see that there's so much congressional interest in trying to figure out what the path should be.
Has there been the same level of engagement with Congress on crypto legislation as there is traditionally with other kind of legislative efforts that Congress is making that speak to the SEC's regulatory authority in a different industry?
I mean, the Legislative Affairs Office reports to the chairman, not to me, so it's hard for me to speak to exactly how much interaction there's been with them. But I mean, I think technical assistance is provided in this area as well as others. Now, Congress may decide they're not really that interested in our technical assistance in this area because, as I've complained about pretty frequently, I think we have not been particularly legally rigorous in how we're thinking about crypto. Again, going back to some of the same things that I just raised, which is we see some really bad conduct and we want to find a way to get in and address it. So that's part of the reason we haven't been legally rigorous. But I think also part of the reason is this unwillingness to really think about, is the crypto asset itself a security or not?
Do you guys give any thought to the major questions doctrine, particular to crypto, but also in general, kind of the evolution of federal jurisprudence on, administrative questions?
Yeah, I mean, I think every administrative agency is paying attention to the major questions doctrine and thinking about how that might apply to various areas. At the SEC, it's been talked about most in connection with our climate change rule proposal that we have out there, which is something that I think I'm thinking about, and others are probably thinking about that as well. I mean, it's certainly outside the agency. A lot of people have raised it. But I will say that, the major questions doctrine has become the thing that gets thrown in now to every conversation. Every time someone is trying to challenge the SEC, they throw in major questions doctrine. So I'm sure that in connection with crypto, it will be raised and has been raised as well.
There have been some judicial decisions that have called into question maybe the SEC's entitlement to deference. Is there a sense of kind of judicial rebuke or correction against the agency in some of its enforcement actions?
Well, I think that we need to put the SEC and this deference question in context, because there's been a lot of focus just more broadly on how much deference agencies should get. So I think that that's something we have to be cognizant of, we as a regulator have to be cognizant of as well. But, I'm someone who really thinks we need to stick to the mandate that Congress gave us and not to extend beyond that. And so I think it's good for us to be held to account for really sticking to the statutory framework that we were given. And so I think about those issues all the time in connection with crypto, but in connection with lots of other things as well. Are we within the bounds of what Congress wanted us to do? And it's really difficult in a government that tries to do so much. You know, Congress has given the agencies a lot of authority, and I think people are starting to say, wait a minute, we want to have a little bit more of a direct political accountability for some of these major things that are happening at agencies, and so I think that's why deference has gotten so much attention lately.
I want to shift to NFTs because you had some really interesting thoughts on impact theory and stoner cats. You talk about this idea of stretching Howey to apply to NFTs, particularly in impact theory. You said specifically that while you share worry that your colleagues have, that certain kind of assets that can be hyped and that people can spend $30 million investing in without any kind of clear vision of what they're going to do with the asset that they receive, right, in exchange, is certainly concerning. But you were very poignant to note that the statements made, or in your view, the statements made in impact theory, and like that fact alone, that this feels like a speculative asset, don't necessarily qualify those NFTs as involving investment contracts. Can you talk a little bit more about that and how that relates to maybe other assets in the world that are not NFTs?
Yeah, I mean, I think that's a good question, and this is an issue that, again, takes us a little bit back to this arbitrary point, right? We are picking out, when we do these cases, we're picking out statements that promoters have made of their assets, and we're picking out sometimes statements that purchasers have made around their expectations that the asset is going to rise in value. And I think if you took that kind of theory, you could apply it to a lot of different kinds of assets. A lot of tangible assets. People have brought up collectibles, collectibles of years past, trading cards, whatever. I mean, there are lots of things where people are buying it because they think it's going to go up in value, and the promoters are saying, hey, this is going to go up in value. And does that really turn something into a security? And does it turn the sale of that thing into an investment contract? I mean, I think if we really were to apply that, as your question sort of suggests, we could end up regulating a lot of the economy, and I don't think that really makes a lot of sense. So I've had some concerns around Howey in general, not just as it applies to crypto, because I think it can be really stretched to cover a lot of different scenarios. And I think it would be helpful for us to maybe try to, it's obviously a court case, so we're not changing the case, and I'm not suggesting that the case in itself was wrong. I think the idea that if you give your money to someone else with the expectation of profits based on the efforts of that other person, it does make sense to capture that within the securities laws, but I don't think that when I sell you a fancy watch and I say, hey, this is going to be something that you can pass on to your kid and it's going to increase in value, that the SEC really should be regulating that transaction. I do think that it would be good if people who were buying these things, whether they're NFTs or physical objects, thought carefully about how they're spending their money and what they're getting. And I do worry that if we move into more and more paternalism as a government, people are going to think less and less about what they buy because they're going to assume that the government is there watching out for them. And, if someone's buying a stoner cat, it's sort of, I don't really view it as my primary objective to prevent that person from, spending a little too much money on a stoner cat.
We're all very happy to hear that.
So I think we need to just also remember that there's a lot of traditional securities fraud going on, and resources that we spend going after stoner cats are not being spent to go after brokers who are wiring money from their customers' accounts into their own. And frankly, I think the latter group is where we should spend more of our resources.
So I want to tease out just kind of one more point. So in Stoner Cats, you talk about there being no limiting principle, right? And this is kind of what you were talking about before. So, Patek Philippe, is that a security simply because you buy it and it might increase in value in the future. That, in theory, I think makes a lot of sense. Are you actually concerned that there could be this bleed of Howey out into other kind of areas of commerce? That would seem very fantastical, right, in my mind. I think you've mentioned that as well. But then the question is, if the answer is no, like it's not actually in real life going to bleed out, right, then is that a conscientious double standard of what to apply the Howey to?
Well, I mean, I think that's the concern I have. And we've brought some other cases. We've brought some cases around wine, for example, which are sort of similar. But I think this is the problem, right? Are we looking at crypto and saying we are going to apply a different standard to crypto than we do to anything else? And I think you see that in enforcement, where we're bringing cases that I don't think we would have brought if the object was not a crypto object. And we're also doing the same thing when we review filings from companies that are crypto companies, right? They're getting a different standard of review. And I think that is certainly it's fair for people at the SEC whose job it is to review disclosures to be asking hard questions of companies that are doing new things, and the risks are different, and we need to tease those risks out to make sure that investors understand them. But I think we can go too far there too in applying a standard that we wouldn't be applying to other industries, and that to me is potentially problematic. You look at something like SAB 121 and you say, wait a minute, if this hadn't been crypto, would we have done something like this? And I say, no, I really don't think we would have. And so that's why when you asked me at the beginning what the end game was for the SEC, that's why I fumbled so much with that answer. Because when I see things like SAB 121 and telling accountants we don't want you doing proof of reserves, and telling, you know, basically forcing custodians out who would otherwise be doing custody, it almost seems to me like we're saying we want all of the actors with experience to be out of this area, and we want it to be you know, as unregulated as possible. And that just, it strikes me as so strange. And so that's why I find some of these questions really hard to answer. It makes me very sad. You know, as I lob all these criticisms against my agency, I should say, they're wonderful employees working at the SEC, working very hard and trying to do the right thing. But the problem is that they're not getting the guidance from the top of the agency about how to make good resource allocation decisions, how to figure out where to spend our regulatory and enforcement energy. That's not the fault of the people working on the individual cases or rules. It's the fault of people in my chair who are not providing consistent guidance about what they should be doing.
Well, I think you're being entirely too hard on yourself on your answer to that question. I think it was great, but I think you're kind of highlighting the tension appropriately that, you know, we all feel, that you feel. And I'm glad you mentioned custody, because I could ask you questions for days about the safeguarding rule, and unfortunately we do not have time to get into it.
Just one point on that safeguarding rule, just to say, a lot of people have raised issue around crypto custody, but that safeguarding rule is much broader, applies to a lot of different asset classes, and we've gotten a lot of feedback across the board on that. And so I think that's a bigger issue, right? It's not just a crypto issue.
I'm happy that we're not alone in that. Yeah, we are unfortunately kind of running out of time. I would love to ask two more questions. One, what is the future of crypto regulation in your mind, or what are the things that could affect it, particularly as we're moving into an election year? There could be a big shakeup on the policy side. How do you view the future, you know?
Well, I think this is my plea, right, which is, it's frustrating. As you can tell, I'm frustrated. I think a lot of people in the industry are frustrated. But what we need to be thinking about now is, all right, so say that we change perspectives and we decide we really want to approach this from a constructive regulatory fashion. What does that look like? We need to have real ideas, operational ideas on the shelf. It doesn't mean that they'll get adopted on day one, but ideas that can be put out for discussion and potentially as proposed rules. So put all the energy and all the frustration that you have into thinking about, okay, if you were sitting in the chairman's chair, what would you do on day one in that role? What could you do to make the rules clear for those who want to comply with them, and to make it easier for us then to focus our attention on the bad actors? Those concrete ideas are going to make the difference, and because there will come a time when people will say, wait a minute, do we really want to drive all of this activity out of the US, or do we want to try to have the people who are really trying to build interesting new things here in the US, as we've always done in the past with innovation? If that time comes and people say, well, we actually don't know what good regulation would look like, then we've lost even more time.
Yeah, so I hope you guys wrote that down. It was a write down moment. Last question. So in library, you said that in 2028 you would be beekeeping in lieu of continuing to write dissents. I am amazed that you have spent so much time, what feels like kind of banging your head against the wall for crypto and other things in your seat. And I think we would all love for you to be there for a long time. Hopefully you're not beekeeping too soon from now, but what is kind of the future? Please don't leave us.
No, but I think, I mean, seriously though, I think it will be really good to have some new ideas and new voices in my seat. So I'm looking forward to that day. But the reason that I made that comment in the library dissent was because the library, one of the library founders had tweeted out and said, you know, it's going to be 2028 and half the industry is going to be in jail and Hester's going to be writing dissents or something along those lines. And I think it reflects a broader frustration of me just kind of putting dissents out and not moving things forward. And I think a part of that is really a function of the role of a commissioner. I'm one of 5, and I've got to get my colleagues to come alongside me, and there has been some progress in that, on that front. But I think, you know, it is frustrating. I will not lie. It's frustrating for me too to not see positive movement on this. And so, again, another plea to you, if you have ideas about what I can practically do in my role as one of 5 commissioners to affect change in a positive way, I'm all ears. As of now, the only thing I've figured out to do is to advocate internally and to write when I have the opportunity, so that I can stimulate people on the outside to be thinking about, are we really approaching this the right way?
Well, your sincerity and superhuman efforts to pursue fair regulation and openness to innovation are felt. We are so appreciative. Thank you so much for your time today. It was a pleasure.
Thank you, Joshua. Appreciate it.